Hello there, my name is Tom Scrollo and welcome to my YouTube channel where we talk all things trading, finances and money in general. In this video, a really special topic, a really simple one, but at the same time a really complicated one. Trading versus investing. And what is the difference? When should you start investing and when should you be trading? What are the differences, the potential risks and the potential returns? So all of that in this particular video. As you might know, I've been an active trader for many years, for about 7 years of my active trading career, and I've traded futures, I've traded stocks, and I traded a bunch of stuff really, but my main focus was futures and some stocks on the side as well. And in the process, I also did some investing into stocks, crypto, etc. So the difference is actually quite substantial. Let me know down in the comments if you used to think, or you think until this day, that trading and investing is actually the same. Well, you might have guessed already by now that it's not. It's not the same. It's completely two different stories, even though some people call investing trading and call trading investing. So theoretically, if you really think about it, then maybe you can confuse these two terms, but in reality you cannot. So number one, which is trading, let's talk about it briefly. So what is trading? Trading is something that you're doing very actively. So you're trading some leveraged products, like something is really hard to trade as Forex. So it might be trading Forex with, huge leverage, or you might be trading futures, which is still difficult, but it's easier than Forex for many technical reasons. And don't scream at me in the comments, you Forex lovers. You can go back to some of my older videos and check out the reason why Forex is, in my opinion, garbage. And that's just not just my opinion, but the opinion of 99.99% of professional investors as well as traders. There are many different markets, many more markets that make more sense, that are a lot more predictable and easier to trade than Forex. Forex is a very specific market. It has a very specific purpose to it, and trading it actively, it's not impossible, but it's a lot harder than trading futures or, for example, stocks. Stocks, for example, are a lot more predictable than Forex, that's for sure, and especially in a short-term perspective, but that's a topic for another video. So trading is speculating very actively, perhaps having anywhere from 1 to 50 trades in a single trading day, which sounds absolutely crazy. There are different strategies. It's super high risk, and most of the time it's gonna be leverage. Leverage, if you don't know what leverage is, Google it, but just in short, it's borrowing money from the broker, so you can actually trade with much more money to potentially make more money. So basically, if you're not using any leverage, you might make $1. If you're using 10x leverage, then you might make $10. At the same time, you might lose $10. So it goes both ways. So this, of course, means that when you have so many hyperactive trades, you're trying to predict the smallest frequencies in the markets, whatever market you're trading, and you're using leverage. I think it goes without saying that something like this is extremely high risk. And most active traders, day traders, swing traders, scalp traders, whatever, it's all trading. Options traders, futures traders, Forex traders, CFD traders, stock traders, most of them lose money. And that's fine. I mean, most of them don't even have any proper education. By the way, all the links to good trading education down in the description. And this is something that a lot of people misunderstand about trading. It is extremely hard. Some people call it gambling. But again, if you don't know what you're doing, it certainly is gambling. But if you know what you're doing, you know how to control yourself, you know exactly how to manage this whole high risk scenario, then it can be a controlled environment. But again, it still is going to be high risk. You need a lot of practice, you need the right knowledge, etc. So it is something that a lot of people lose a lot of money doing, unfortunately. This is something super active, super hyper intensive, super high stress. So you're there at the trading station, you need a bunch of screens, like my trading station back in Dubai, a bunch of screens, like I have 6 screens plus the laptop that I used for news at some point as well. So, and you're monitoring, and that's the reason why you need so many screens, because you're watching a bunch of markets at the same time. If you're trading futures, you might be looking at oil, gold, silver, Dow Jones, NASDAQ, DAX, whatever. You can be watching like 20 different markets at the same time. When you're trading them short term, you cannot just open the trade and then suddenly change your screen to something different, because you really need to pay attention to what the fuck is going on in that trade, because your money is in it. So you have to really control it, and that's why you have so many screens, and that's why you really want to keep an eye on everything. And of course, this is something, spending their hours upon hours preparing for each trading session, regardless of the market that you're trading, and then doing a lot of statistics and algorithm adjustments. So it's high stress, but of course it's worth mentioning that it's high potential return. So there is a direct correlation between risk and return. So if the risk is super high, then the potential return is also super high. It's very difficult and really impossible, and it's a paradox, to have super high return and super low risk. It's impossible unless we're talking about some magical mushroom or whatever magical pill, which most of the time is just insider information when you know something that others don't know. So for example, if you're an Apple executive and you know that this quarter Apple has suffered and the report is not going to be very good, so you can pinpoint a strong key market level and just short it from there. But again, this is punishable by up to 25 years in prison or something like this in the United States. So it's a huge felony. It's a really tough crime, and you can get punished for it. Now you understood it. So trading, super hyperactive, super high risk, but high potential return, a lot of activity every day in, day out. And then there is investing. So investing is something that investment banks, hedge funds, and all these big boys are going to be doing. So of course, they don't want to see huge volatility, even if there is a super huge potential return. And they used to do a lot of day trading as well with some money, just a little bit. I don't know any, proper licensed and regulated hedge funds and hedge fund managers that focus on day trading Forex or day trading futures or some crap like that in their eyes. I mean, for us, for retail traders, for somebody who has like $5,000, we cannot really go into long-term investments and build portfolios with. And that's something we'll talk about just shortly. So that's why, institutional people and banks, again, hedge funds and all these big managers, they think that they laugh at day traders and at traders actually, for the reason of super high risk and because of the statistic of how many traders actually lose money. And they're right about it. But at the same time, they don't consider the fact that most of the people don't have $100 million to invest. So that's why most people, just like myself actually, we start with active trading, hopefully make some money, and then move on to other things, maybe teaching people, creating other companies, investing into your own private equity, creating a hedge fund maybe down the road, but with long-term investment strategies, not active day trading strategies, etc. So if you're coming from a dirt poor family or not from much in general, then this probably is going to be the only way to go if you want to grow fast. So that's why a lot of people go into active trading, and that's why I went into active trading, because I didn't really have millions of dollars to invest or to trade with, whatever. So, and investing is basically, again, what these big boys are doing. They're just investing money into companies that they believe in. Most of the time, there are different ways of investing. There is venture capital, there are stocks, and there is crypto. Again, also riding all these waves, like right now, the market crashed, and you can watch my previous video, one of the previous videos on how to buy this dip and how to act in this crypto crash. And right now I have a lot of money in crypto, and pretty much the whole portfolio was utilized, and it just jumped up a bit. But if it goes down again and goes down hard, I'll just probably add some money to get an even better average entry price. But again, this is not trading. This is more on investing side. So I'm betting on the crypto market in general and on the strongest projects within the crypto world. And if they climb until the end of the year, most of the people are projecting that Bitcoin could hit $100,000, so I could make 300-400% on my current crypto portfolio by the end of the year, which will be already in millions of dollars. So I'm gonna be an extremely happy Thomas Krallo if this is gonna happen, and then I'm gonna sell it off at a certain point, which I believe is gonna be the most reasonable. Depending on what's gonna happen, I'm gonna adjust my view as we go, and I'm gonna leave it completely. I'll sell everything in the world of crypto, then I'll probably put it into my stock portfolios. I'm gonna start because there's gonna be a stock market crash, hopefully at some point soon, and that's when I'm gonna just take the money from crypto, put it into stocks, and build a few nice portfolios for nice return while there's gonna be a crypto winter, so to speak, when this whole hype is gonna die down, and we'll wait for the next halving of Bitcoin. So it's all just ideology. You already guessed it. So investing investing is more based on ideology, based on fundamentals, based on macro analysis, based on analyzing market sentiment. And if you're building, stock portfolios, then you're analyzing, doing deep analysis of company fundamentals, PE, PS, PEG ratios, whatever, all the previous reports, number of employees, market sentiment towards this particular company. Then also macroeconomics, you're trying to maybe analyze and predict the GDP direction before it's actually the report is released. And so you're doing this, grander scheme of things, and you're investing into indexes. Probably I'm going to make a separate video on this as well, on investing into indexes and what most hedge funds are doing. And when you'll learn about it, and by the way, subscribe to my YouTube channel because you'll learn a lot here, a lot of the stuff that is not discussed in other YouTube channels. So pause the video, click that subscribe button and hit that notification bell so that you're notified when I make a new upload. And again, all of this is a long-term perspective. Maybe sometimes with a smaller portion of the deposit, there is going to be some short-term opportunities, some dips in certain good stocks that are undervalued for whatever short-term reason, and then you buy that dip as it comes to its normal average valuation, fair market value. You're going to sell it there, so it might be a trade, or I shouldn't say a trade, an investment for 30 days, 60 days, 90 days, etc. But most of the time investing is going to be long term, so it's 1 year plus. So when you put your money into a company, you expect it to grow for the next year, 2 years, 3 years, 5 years, 10 years, whatever. So this is going to be the world of investing. So you are basing your decisions not on technical analysis, which is more active trading. So active trading is putting those key market levels, using level 2 market data for initial impulse calculation, and a bunch of this technical stuff, key market levels, channels, flags, whatever. So a bunch of this stuff I'm going to discuss here in too much detail. It's going to take a while to list all the things you might be looking at as an active trader. And when you're an investor, you might still use some of this just for your own understanding of where the price is at in terms of the price action in any company when you're buying it. But at the same time, 90% of your reasoning for putting your money into a certain stock is going to be more fundamental. So ideology. Do you believe in the company? Where do you think this company is going to be in 1 year, in 3 years, 5 years, or whatever is your time frame that you're keeping in mind when you're putting your money into that particular stock? Where is the world economy going to be? How scalable is that company? So if, for example, Apple has such a huge capitalization, it's really hard for it to, double its capitalization suddenly. And when it's a smaller company with a capitalization of, maybe just a few $1 billion, it could still do 5x in the next year. Who knows, especially if it's a high-tech company. So, and you're keeping all of that in mind, so you're just believing in a general idea of the company and what it's doing. So it's an ideology. And of course, when you are investing in this way and you're building very conservative portfolios, the risks are really low. Tell you the truth, I lost some money in active trading. Overall I made a lot of money, but I had ridiculous ups and downs, and I had days when I lost so much money that those were just really dark days from a few years ago when I was doing like a lot of hardcore active trading and trying to build that capital. But with long-term investments, tell you the truth, and you can hate me all you want, but there wasn't a single time I lost money on any of my long-term investments. I built quite a few portfolios, interesting ones, including Russian stocks and crypto, etc. And not a single time I lost money. It wasn't that I made a bunch of money, but I always made money, because long-term investments are by far easier, in my personal opinion, than active trading, by far a lot easier. But there is always a catch, right? How can it be without a catch? And the catch is very simple, and that is the potential return. So don't get me wrong, if you just take one stock, some high-tech company that can be quite explosive and it can double in 2 months or 3 months or in a year, and you can make 100% return, it's possible. But this is gonna be coming close to trading, because you'll have a concentrated risk in just one asset. So it's something that nobody would ever do. No hedge fund would ever have just one asset or 2 or 3 assets. Most of the time, a proper hedge fund or a proper portfolio will be at least 10 stocks, 10 different assets. Some of the super conservative portfolios will have 100 different assets, 100 different stocks, and etc. And in that case, you can imagine that something goes down, something goes up, and in the end of the year, you'll be happy if you'll have like 20% yearly return. So if you'll surpass S&P 500 index, the S&P 500 return by 5%. So usually on average S&P 500, correct me if I'm wrong in the comments, I think it was around 15% return. So if you do 20 and you surpass it by 5%, you're going to be considered an amazing investing guru. And now you already see the problem, right? So if you have $10,000 and I'm ready to place a bet that most of you guys are not going to have even $10,000 to invest, but let's imagine that you have $10,000 to invest. You'll make 20% yearly return, which is going to be $2,000, which is very nice, of course, sure. But how long is it going to take you to get to the first million? It will take you 15 freaking lifetimes to get to $1 million. When with active trading, you can get there within a few years, which is difficult, but it's possible. And most of the people fail on the way, but again, it's possible. That's why high risk, high return. And then investing, again, that's the reason why everybody goes into trading first and not investing. In my personal opinion, you should start investing either with any money. If you really have this patience and you don't really have time or courage for trading, then you can go to investing with, I guess, any amount of money. But me personally, I started doing long-term investments only when I had a substantial amount of money to put into a certain portfolio, so that when within 6 months, I remember one of the best portfolios, if we exclude crypto was just crazy. Crypto, I did like 2,000% on my recent portfolio, which was just holy crap. But yeah, when it comes to stocks, one of the best portfolios that I did was in the Russian stocks, and we did like 60% in under 6 months, around 6 months. So it was an incredible return. But again, 60%, it's not bad. It's not bad from $1 million, but not from $2,000 or $5,000. So this is something that you should really keep in mind. And I think personally, as I'm looking at it, I'm looking at my students and how they're performing and how they're understanding the market, I think that it's really best for any beginner trader or investor to really learn both worlds, the world of investing as well as the world of trading, so that you get an idea of how it all functions, how these speculators, traders, active traders function in the market, what they do, and how they dump or pump and dump the price sometimes, and how it all functions. As well as if you're a trader, you should really consider learning investing so you understand how the big boys function and why and where you could see a lot of money going into certain assets, at which price points and why. When you follow the news and the macroeconomics and etc., you'll be having a really good roadmap of what is going on in the world on a grander scheme of things. So you'll be able to prepare yourself for your active trading journey as well. For example, when the market is only climbing, you see and you understand that we are entering a bull run after a huge market crash, whatever, then you can be long biased for most of the time as an active trader, just as a brief example. And for this reason, as you might know, I'm the author of University Grade Trading Education, which is my main website, thomaskorallo.com, with one of the best trading learning programs in the world. And it was primarily focused on active trading, so swing trading, scalp trading, day trading, and it's applicable to crypto, forex, CFDs, futures, options, everything. So any market, everything is in there. But as I was thinking about it, I decided that I should really do a bunch of more lessons, a separate part of this learning program, and dedicate it to long-term investments. So how to build portfolios, how to do macro analysis, how to analyze any stock, where to get trade ideas from, etc., and how to build portfolios in general, how to apply it in crypto. And I actually even discussed venture capital. If you don't know what venture capital is, then Google it. So, and now, very shortly, within a few weeks, I believe, depending on when this video comes out, we'll be adding 35 new lectures, and it's gonna be like the biggest chapter number 16 in the learning program, which is gonna be like, by the size, it's gonna be only one chapter, by the size of it's gonna be the biggest chapter of the whole learning program, which is gonna cover everything from A to Z when it comes to investing. So from that point onwards, my learning program at thomaskorallo.com is gonna become like literally A to Z, from active scalp trading to Warren Buffett's style of investing. So you'll learn everything about everything. So, and it's gonna, live up to its name of being the best trading learning program, and the only learning program anybody would need to get into the world of trading and or investing, right now as well. And certainly the prices will be increased. So within these 2 weeks, when we add the new material, the price will still stay the same, and then it's gonna stay the same for another 2 weeks. So in the next 30 days, the price is gonna stay the same, but after those 2 weeks run out, after we add this new material, we'll be increasing the prices of university grade trading education by at least 30%, because there's gonna be more material, and I did a lot of work to put it all together and to edit everything. My guys did a great job of editing everything properly and doing all the adjustments to the website and etc. So there's a lot of work was put into this addition to the learning program, so therefore I think it's logical that we should increase the prices by at least 30%. So of course all the existing students will get this access to all the new material for free. So all the existing students, relax, don't scream at me. I'm not one of those crazy I'm a capitalist, and my marketing guys hate me for this a little bit, but the price, you're not gonna have to pay anything extra. So everything that is getting added, all the existing students always get access to it for free. So if you enroll today with the current price and get access to whatever is in the program right now, and we add something new to it, like within a few weeks, this new chapter, then you'll get access to it for free. So if you enroll now, you'll save at least 30%. So all the links in the description, and as well as the link to one of the best trading webinars as well. So if you were looking to become one of my students, now is gonna be the best time to enroll at the current rate, get all the current material, and then get all the new material about long-term investments, long-term investing strategies as well for free when we add them. So right now, really the best time to get in before the 30% price increase, and we'll be more than happy to see all the new faces in university grade trading education. Right, thank you for watching, and thank you very much for sticking around till the end. And go ahead, click the link down in the description, become one of my students, and learn everything there is to learn from active trading to long-term investments as well. Cheers, thanks a lot, and I'll see you in the next videos.